Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at VerifiedInvesting.com. All right, so of course, we're going to go through all the key technical factors in the markets. Crypto, we'll look at Bitcoin, we'll look at gold, silver, and other commodities. We've seen oil really have a beautiful pullback since, again, I began shorting it late last week or mid last week. So again, good stuff there. We'll go over the charts on those, as well as key stocks, both reporting earnings this morning. And then after the bell, we have Netflix and United Airlines. So we're into earnings season. We have a new president now sworn in, and things are about to get volatile. All right, let's start out with the charts over here. Let's take a look at the S&P 500. If we take a look at the SPY here with tracking ETF for the S&P 500, we can see that we are net positive on the day. And again, you can see, again, here was Friday after hours, and then when we opened at 4 in the morning here on the SPY, a pretty sizable move to the upside, a little bit of a retrace, and now we're floating back up. Now, again, the kicker is this, right? We're looking to see what the executive orders are or essentially entail. Do they affect economic outlook? These are all things that as a technician I want to pay attention to, plus obviously the charts. Now, if we flip over to the daily chart of the S&P 500 or the SPY, this is something that I'm watching today, right? So what we have here is a parallel right through here and right to that low. And look at, again, I love showing this because we'll see it on the Bitcoin chart as well, where X marks the spot. X marks the spot when you have two trend lines that converge and cross and price comes into them. That is always your best setup, highest probability setup. Doesn't mean it's always going to work, but it's going to give you the highest probability of being successful. In the case of this, we had this longer term trend line and then this one right here, and you can see right there, that was where we got that bigger move to the upside. Now what we do is we take that same line here, we stretch that parallel up, and we can see on the SPY these highs right here connect through. So on this day today on the SPY, S&P 500 tracking ETF, I'm going to be watching the 602 to 603 level here. And again, that's right into that level there. That will be a key level to watch, all right? So again, watching that, if we do get above this, you obviously have double top right here at 601 or so, or check that, around 610-ish, 608, and then we look for that next trend line up here, which would be that same hit, right? So if we get through this area and double top, we have to start saying to ourselves, okay, well, if that's going to happen, we might end up going all the way up to this line right up here. All right, so again, notice how as my job as a technician is not to say, oh, that's going to happen or that's going to happen. It's to be constantly looking at probabilities and saying, okay, well, if we break this level, what's our next level to the upside where we ultimately most likely are headed? And then we'll watch that level to see if it gets rejected and what the probabilities are for that. Okay, so again, a couple little tidbits on the S&P 500 chart here. And again, it's been a pretty solid short-term move, but just pointing out one more thing is we've seen this over and over again, right? So here we had our top in the market, right? The dip and then the big bounce. Dip, big bounce, dip, big bounce. So we kind of want to look and see, does this get negated? Do we then start to break above here? And again, if we do, double top and then obviously that upper point. If we can't break here, what do probabilities tell us? And you guys can be answering this at home or wherever you're watching, is that if we can't get through here, let's say today we close below that line, does it mean probabilities favor pullback or do they favor a breakout? Well, as long as we haven't broken resistance, resistance is to be respected until it's broken, in which case you would favor a pullback. Once it gets broken, okay, now it's jailbreak. It's a jailbreak, it's free, and you start to look at that next level to the upside, all right? So again, it's much more about not being so firm on your statements, right? It's not to say, oh, this will happen or this will happen. It's more about, okay, well, we're into resistance, so resistance is a wall. Chances are we pull back. If we break the wall, now you have to say, okay, the wall's been broken. We can now travel to the next level. All right, let's get into a couple of these other charts that I wanted to take a look at. On the NASDAQ 100, again, you can see same sort of formation right here on the QQQ. And the big question is, we've been making lows, lower, low, lower, low, high, high, lower, high, lower, high. The question again is, do we start to break up? If we do, this is going to be a major level on the charts at around around 545. Okay, next up, the 10-year yield chart. This has been a beautiful trend line pullback, and if we take a look right here, you can see right in there, a beautiful pullback. Where are we most likely heading? Where are we going to find support? We can put that on our chart right there. And again, just to go over to the big board here and take a look, the odds is that, again, it got rejected off this trend line, right? Very simple trend line. There's no magic bullets here or anything like that. I mean, all I'm literally doing is playing connect the dots, which is why I love showing it to you guys in the game plan, because it doesn't take, you don't need a master's degree in crazy stuff, right? I'll tell you, listen, I majored in economics. I learned some stuff. Did I learn this? No. This is self-taught stuff, and then I'm able to share my knowledge with you guys about how to do this. But I love the simplicity of this, right? I mean, there's so many crazy indicators out there, like, MACD and this and that, and it's like, well, or you just keep the stuff simple and you can get your levels perfectly as well, or at least understanding probability, what is it going to be? Okay, so right here was resistance, price got rejected. Where is it going to find support? Right there. Now, does support guarantee that it will bounce? Nope, there's no such thing as guarantees in trading, but what it does do is tell you that odds, probability, do favor a bounce off that level, and that would be what you would expect. So there's still a little bit more downside here, and we'll keep an eye on that and kind of see where it all plays out to. Okay, next up, let's continue on through here, and as we go on, I did want to bring up the Apple chart today. Apple is getting hammered again. More and more kind of chatter about how weak sales are in China, and the stock again is down, trading near around 225 and change. And if we go to this right up here, what do we see right up in this range? We can see again that we are headed down. Major support for Apple will come in around this 220 to 221 level. Very clear, right? Pivot low, former gap fill right there, pivot low here. If price again falls into here, the odds would be at least for a short-term bounce back after a meteoric fall. And just to put this in perspective, for a stock that was on the verge of piercing $4 trillion in valuation, as of today, as of this morning, we are now down 13.5%. Market cap wise, that is a massive, that's got to be like $200 billion, actually more than that. I mean, that's a massive amount of loss in market cap. And really, if we go down to this level, this would be 15%. So a 15% decline into this 220 to 221 level on Apple. By the way, look at the simplicity of this. I love this, guys. So if we bring this up and we go to the big board here, and what we look at here is just look at this point right here. So see how price breaks this upsloping trend line? And then what does it do? It does one of my favorite things, which is retrace to the scene of the crime, right? So you break down, you retrace right here, and then it gets rejected and comes in. And again, that's something that I always talk about because it can be used as a trade setup. So if you have a support line, let's just look at this. Well, you know what? We'll use the this line as your support. So if you're trading like this and you bounce and then you break down, the general prognosis from most retail investors is, oh, it just broke support, so let me short it here, right? Instead, what I like to do and what I try to impress upon people is saying, be patient. Like, worst case, you miss the trade. Okay, so I've missed a million trades in my life. I mean, every day I'm missing trades. It's about the trades you do get. And so the patience and discipline is paramount. And what you want to do in general, what I like to do, is wait for that retrace, and then the bigger rejection comes in. So breaks, retraces, and then the rejection. And what's nice is you end up getting a better price. So to short, you end up getting here versus here, and it's a better entry opportunity, means generally a little bit lower risk overall. All right, so Apple's on watch for 220 to 221 on the charts. Now, if we go to 3M here, we can see they reported earnings this morning. Initially, the stock flushed, then it's floating up a little bit. To be honest, it's not making a big move. I did have levels isolated down. If we zoom out on this chart, we can see right here that here we had a level. I had a level that if for some reason it popped up massively on earnings around 158, nice parallel here with here. So that would have been a nice little short. And then same thing if it had flushed into about the 130 to 131 level, that would have been technical support. It didn't do either. So what do do? I sit on the sidelines, right? There's just no trade here for me at this point. DR Horton also reporting earnings this morning. The stock pushing up initially, coming back in, is very slightly up. If we look at this again, the stock has been beaten down, so it is up a little bit on the day, but there's no trade. Same thing. You'll have a little resistance at this gap fill here at 153.80 or so, but probably not tradable for me because I need more volatility in the stock. All right. Netflix reports after the bell today. A couple levels to watch. Number one, if we zoom out, we can see this bigger parallel, and we can utilize this high to this high, which is parallel to these lows. So what does that do? It gives us levels to watch. So let's talk about this, as by the time I'm doing trading the close today, they're going to report right at 4 o'clock. So I have to be ready and know my levels ahead of time. Thus, I'm going over them with you. And by the way, the earnings trader guys will be trading this earnings in the after hours, as well as United Airlines, which will report right at the closing bell as well. All right, so we have our parallel and we have our double top. So those are the two levels that I cue in on when I'm looking at this for potential trading opportunities. So what I do know is, number one, short term, there's not really a bear flag. There's not really any bullish signals. So I don't really have something where I could say, okay, going into earnings, it makes sense to take a position short or long. I just don't have it. And that's okay. There's nothing that says you have to be involved when they report earnings, because that's more gambling anyways. And we don't want to be a gamblers. We want to have the odds in our favor. We want to be the casino, if you will. All right, so what I do know is that if Netflix dumps, this area right around 760 to 770 should be some technical support right there. That would be my first level in the after hours, where if it flushes into that, that would be interesting. Now, granted, that's a big drop, and that's almost a 100-point drop, so that would be over 10% drop on the stock, but still good to know that level. And then vice versa, if it rallies, double top, and then if it continues up, we have this line extended out. Those would be my major levels on for trading this in the after hours today. And again, what are the odds that either of those hit, because they're pretty far away? The answer is pretty low, but the thing is, if they did, it's better to know what to do in that scenario. At least for me, I need to be prepared just in case, because that would be, I mean, imagine you come down all the way, let's say, to 765 or so, and you get an entry there, and then sometimes these things can snap back to like 800, and to do a day trade here and be able to get out here, let's just say, and I'm hypothetically saying that could happen, and we don't know if it will, but I mean, that could be a massive gain as a day trader, and that's like, I mean, that could be literally some people's monthly salary or more on the day trade side, just by knowing your levels ahead of time. Very, very cool stuff. Right? All right. United Airlines reports this has been one of the craziest stocks, not because it's a crazy move up, like, listen, AI stocks, all that, but because it's an airline. It just has been meteoric. One level to watch here is this trend line. If ever this line breaks and confirms, that's where the floodgates should start to see downside, right? So we should start to see some bigger downside. As long as it stays up here, I mean, listen, it could go a little bit higher. At some point, there will be a reckoning day for this stock. It may not be today, but we will find out in the after hours when they report earnings. A couple chart setups for me that I'm watching today. I am liking if Robinhood goes a little bit higher. There's a short level just upwards of, let's say, $51 per share. Look at the trend line right here. Beautiful trend line connecting through these highs. The stock now is up 1, 2, 3, 4, 5, and up pre-market. So 6 days in a row, coming into a time count, which would be tomorrow technically, but right up into this level around 51 or so. That would get my attention on the short side. So that again is potentially, that's more of a swing trade to be fair, but nonetheless, we'll see if it gets high enough to pull the trigger in smart money stocks and ETFs. Then I have Ralph Lauren. Now, we know that the economy is still doing relatively well, so that's okay, right? Relatively well on the economic side here, but ultimately, keep an eye on this parallel just to go over this chart. This would be so this is a high-end retailer, right? And the idea is that if the economy starts to weaken, and we know that this is already at resistance, that if we get those signals of a weaker economy, this would probably be one that would fall pretty precipitously. And so I always like to have those in the back of my mind saying, okay, let's say the jobs report comes out weak, and we start to see a recession looming, or maybe a recession. What are my options here? Do I want to just short the market? Well, maybe, but are there individual names, a high-end retailer? If we start to see that high-end retail consumer stalling out, this chart sets up beautifully. And again, just to show you guys, you have your lows right here. That's your lows. You connect those, you drag your parallel line up, and you basically get all of these highs here, and we're right up into that area now on a chart that, again, has done very, very well, which to me is banking on an economic outlook that is very, very strong for the high-end consumer. But at some point, I do think that high-end consumer starts to stall out. We've already seen it from the lower end, the lower income consumer stalling out, whether you're looking at Dollar General, Dollar Tree, or McDonald's even, and what they're saying. But the higher end, because of the stock market, I really do think it's because of the stock market, has been holding strong because they've seen that stock market always be making new all-time highs, that wealth effect keeping that consumer spending. All right. Let's get into a couple others here. We got to take a look at Bitcoin, guys. If you've been following along, Bitcoin has been magical in terms of its technical levels. All right, I'm going to walk back to the big board because, again, this is just so important to go over. So, what have we talked about? We've talked about the megaphone pattern, right? If you've been following along, megaphone patterns, again, you basically have diverging trend lines, right? So it's getting bigger. Here's where you talk into, right? And here's the idea here. There, it comes out much louder. Essentially, that's what this is, right? Okay, so we have this. That's your megaphone. All right, so for the last probably about, 3-4 weeks, I've basically been saying, all right, guys, so just understand the levels. You have your support here, which keeps on holding, and then we have resistance, and look at what happened yesterday. The hype from the inauguration popped Bitcoin right into, remember I said earlier, X marks the spot? So you have the double top right here, and you have the up-sloping megaphone. Price literally went right to that crosshair, pierced it, and reversed. You went to 109,000 and then basically fell to about 100,000. Incredible. But again, the point of this showing is that, listen, charts don't always work. We know that. It's a probability game. But it gives you this empowerment where it's like, okay, I just don't have to rely on what the pumper and dumpers are saying on X, or what they're saying on all these other social media, or what CNBC or Fox Business and what their analysts are, their talking heads are telling us. I actually have a place to go where, listen, certainly I'm going to have my fair share of losses, but I can win many more times than I lose. And that's what this shows you right here, is just being able to pinpoint these levels gives you an advantage that, to be honest, the institutions don't want you to know about. They don't want you guys studying charts because this is how they make their money. They know these levels. They're just not telling you. All right? They're, in fact, in my humble opinion, and again, this is just opinion, but I believe that the institutions, when they release upgrades and downgrades, they actually do it where they might upgrade something. Like a lot of these guys have upgraded the S&P coming into the new year and said, hey, we're going like 10% higher this year, or 12%. My personal opinion is they're probably unloading. They have their alternates, their buddies unloading into that buying that is essentially creating what I call exit liquidity, right? So knowing this gives you that edge. And listen, it's not to say that Bitcoin can't get through this level. It certainly could, but let it get through before you jump on the, oh my God, it's going to 250,000 bandwagon. Like, just let the charts speak to you, let them guide you, and all of a sudden it's very freeing. You stop relying on the social media kind of crazies out there that are just pumping their bags, right? If you're in crypto, and you start looking at actual data-based analysis, which is, again, what verified investing is all about here. All right, so let's get into a couple other charts. We'll go over a couple other things here. Number one, we'll look at gold real quick. And gold, again, has continued to push up. This is a great example of minor versus major. So again, I've gone over minor and major resistance with you guys. I know a lot of questions come up in the comments about, well, how do you know minor versus major? So minor resistance would be much more like a trend line that just is connecting two shorter term pivots. So see how this only goes back to December? All right, in addition, it's not the highest point on the chart like this would be. All right, so this would be major. It's the highest point. It's the all-time high. That carries weight with it. Think about it like that. Like, what carries weight? Does an all-time high carry weight, or do two little pivots that were below that carry weight, right? So short-term trend lines that connect two lower pivots versus this would be major. So this would be like the big M. This would be like the little m, the minor, okay? And look at what happens. So when you hit a minor level, the odds are you'll still pull back, but it's like it's a much smaller pullback before a potential breakout. You could have even come back here, but majors are the ones that are like mountaintops, right? They're major. Versus minor is much more like boop, like a little hill. And that's the idea behind it. Now, listen, learning this stuff doesn't come overnight. It's part of the reason why I do this show, is to help you guys kind of understand the basics of it. The idea is I hope eventually all of you guys study this a little bit more, because it really, again, like I said before, is very freeing in terms of investing. All right, so either way, gold is pushing up right now. Let's see if it closes above the minor resistance today. If it does, you're looking at your upside double top as your next target on gold. GDX looks higher today as well. Now, silver. Silver is up a little bit today. It has again, and it is behaving as it should, meaning that it confirmed above this trend line right here. So again, you can see here's a close, here's your confirming candle, here's your retrace. When you confirm above a level, the level becomes major, which means it should support the price on the retrace. That has happened. But just notice the difference here between gold and silver, right? So gold, if we go to gold and we look at its wedge pattern that it broke out, here's its wedge pattern down here. Look at how high it is. It hasn't even retraced to that level, versus silver, and this is why silver to me is a weaker chart, is already hammering on that support level, that major support. And so you can see it just is weaker overall. I still think that, again, there's some concerns that we could eventually head into a recession, maybe because of China's weakness as well, all of that type of stuff pulling it in. All right, next up, oil, guys. Again, I kind of walked you through all of my entries on the oil short here that I'm in with my Smart Money Commodities members, and you can just see very clearly here, right? So I actually started my short right here. And I explained to you guys that when I get into positions, I go in expecting that I might lose. And that's a mindset change that is very freeing, because you don't allocate too much capital. You go very conservatively. What it enables you to do is say, okay, well, this might be wrong. And then I added right up here, and that was actually wrong too. And it just shows you, like, listen, as good as technical analysis is, it still can be wrong. The key was I had this level up here. So I started a position, added to it, bringing my dollar cost average right in here. And now look, all of a sudden in the money, target 1. This is T1. So isn't that amazing how T1 is basically back to my initial entry, but this is where I plan on taking half off. And so I pocket that money. This is, again, money management, which is so important for us as traders. Money management, take half off, and then I'm basically free to let oil come down here. Or if oil pops here, what could I do? I could put back on what I had before. Now I've already taken profits, and I'm keeping my average equal or even a better average. These are the types of things, folks, that make or break investors over the long term and the short term. Okay, lots of good lessons today in the game plan. Lastly, natural gas, not a whole lot going on here. But if we look at natural gas, again, still holding within this parallel right here. And again, you know, this is a great example of support. But remember, the more you hammer on support, eventually it should break. So if it keeps hammering here, be very careful. Like I would buy the first hit of this line, but once you hammer it too much, the door is already splintering and the lock is weakening, and I don't play like this support. Now, it's still shorted. Upsloping trend lines can be shorted. You don't get the same breakout effect on upsloping because it's overbought more and more, higher highs. But here, I'm not looking to go long here anymore. I'm not even looking to short. It's too risky because it could pop back up. But nonetheless, I'll guide you guys on the levels and the trades. All right, guys. I got to get to my Apex Live day trading room. Love that so many of you guys are joining that. I think it's a great educational piece with some great insights into not only day trades that we're taking in our own accounts, but also the human nature, the human psychology, and also the money management. I mean, like, listen, last week I had a loser myself. It's amazing. We track it all. We generally, me and my traders will win over 80% of the time, but we still take losses, and that just shows you the reality of being a trader. Is that you're not going to win 100% of the time, so don't commit all your capital. Know your exits. Know where it kind of fails potentially, and then move on and go to the next trade. And as long as you can win, let's say 75-80% of the time, most traders can really make a great living doing what we do here. All right, thank you so much for tuning in, guys. I will talk to you at Trading the Close. Take care.